Welcome to Bankless, where we explore the frontier of internet money and internet finance. This is how to get started, how to get better, and how to front run the opportunity. This is Ryan Sean Adams. I'm here with David Hoffman, and we're here to help you become more bankless. David, fantastic episode today. Awesome episode today. What'd you think about it?
Yeah, this episode with Phil was a big step back away from the intricacies of DeFi and the intricacies of cryptocurrency and into the world of cryptography and how crypto, as in cryptography, is impacting the macro world, right? Because cryptocurrency is really just one instantiation of the use of cryptography. And something that the Bankless Nation, I think, really relies on are not just cryptocurrency, but tools that empower the individual. And all of these tools that we're seeing come out of the world in 2020 and even and earlier than that are all based in cryptography. And so this episode with Phil is how crypto is empowering and it's changing the world in so many different ways. And we go into a lot of those ways here on this podcast.
It's really, that's why we called like Bankless, a movement, right? Because it's really a political movement that we're talking about here. Power to the people, power to the individuals, power to small groups to coordinate without necessarily the big heavy infrastructure of a nation state. That's a pretty powerful concept. And Phil wrote this fantastic paper, the Sovereign Individual Investment Thesis paper. I think he took a lot of the ideas that were he made them more concise. He applied them to crypto, but from a book that both of us really enjoyed, The Sovereign Individual, a book that was written in 1999?
1997, yeah.
Wow. Okay. Yeah. Maybe because we don't talk about it a lot in this conversation with Phil, but maybe you should give folks an overview of that book.
The Sovereign Individual was written by these two guys that I think it's for a book of when it was written it is one of the books with the most foresight I've ever read ever, except for the fact how the first chapter is all about the Y2K. So you can, if you guys want to read that, just skip over that chapter. You won't miss anything. But in 1997, they talked about cyber currencies that are outside the purview of the nation state, right? And what the impacts that happen as a result of the existence of these quote unquote cyber currencies. And so they didn't know about blockchain. They didn't know about Satoshi, but they just figured out that at some point there's going to be money on the internet and it's going to be outside of the nation state. And so they use that. And they also talk about just what they call changing returns to violence. And what that really means is, violence maybe puts that in a violent image in your head, but it's really talking about who in society do we allow the privilege of having a monopoly on force and coercion. And right now in our society, that's the police and the military, right? And so we give over the right to be violent to the nation state, and the nation state coordinates us with that privilege, right? And what Phil talks about in his Sovereign Individual Investment Thesis, which is based off of the Sovereign Individual book, is that cryptography really reduces how advantageous it is to have this monopoly on violence. And one way to illustrate that is that, with your private keys, no one can take away your ether, right? No one can take away your DAI. No one can take away your Bitcoin. It doesn't matter how much force, how many nuclear bombs, how many tanks a nation state has, because cryptography doesn't respond to violence, right? It's in a different universe. It's in a different paradigm. And there's just a lot of different implications that results on just the invalidation of what makes a nation state powerful. And so that's what we get into in this episode with Phil.
Yeah, we talk about some of those downstream implications. Of course, we often talk about money printing and the macro landscape, and we certainly touch that here. But we also talk about changing labor markets, which is, I think, an interesting take about how education and population, like labor in populations, are going to change as a result of this power transfer to individuals. So it's a fantastic, fascinating discussion, and we're glad you are joining us for it.
One really good example that Ryan and I came across recently that is evidence of how this Sovereign Individual Thesis is playing out is how we got a graphic designer for the Bankless Q3 token report, which you guys should totally check out, by the way. But we tweeted out, we need a designer. We need a graphic designer because we have this report coming out. And we got people in our Twitter DMs, peaked about the job. And we ended up selecting this individual from Nigeria who really worked hard to produce a really good template for how we wanted our token report to work. The power of internet communications, along with our ability to pay this individual in DAI instantaneously without a wire transfer, without permission of a bank, without talking to any nation state authority, we just sent him his DAI for his labor. What this is really going to do is really even the playing field between labor markets across the whole entire world. This is going to be a massively globalizing force. And what Phil talks about is how, first world nations, developed nations have this advantage that he thinks cryptography is going to erode away. And because global labor markets are about to become far more equalized, because, somebody in some developing nation can do similar jobs as somebody in a developed nation and likely do it for a lower cost than what would be the market rate in the developed nation. And so Phil sees this pattern playing out not just in labor markets, but also in education, and just almost every single industry has implicative changes as a result of cryptography.
The 2020s are certainly going to be a decade of changes, and so will the rest of the century. It's going to be exciting to watch. So before we get into this conversation with Phil, we've got to mention an event that is coming up. It is an opportunity if you are a DeFi developer to help make the world a bit more decentralized, a bit more serverless, a bit more bankless. It's the FILECOIN Accelerator. You have the opportunity to earn a $20K grant by applying to the accelerator, along with a $1 million in follow-up funding. We're huge supporters of what FileCoin is doing with IPFS and with its standards to bring about a decentralized storage network. So if you want to apply, if you're a DeFi developer or an entrepreneur, you want to apply, go to the link in the show notes and do that by the 15th of November. David, you're actually serving as a mentor for this too. Right?
Yeah, I'm really excited about the development and growth of FileCoin, and I'm looking forward to seeing what value I can add to this accelerator. For those that don't know, FileCoin is a decentralized storage solution. So think Dropbox, think Google Drive, but decentralized, right? And this is, perfect time to talk about how cryptography is changing markets everywhere. I wonder what happens when the world has, just freely accessible and abundant storage in the cloud that is outside of the control of any one single individual, right? That is what FileCoin is all about, providing persistent and persistently available data to the world. I think that's a really cool thing to strive for. And so I'm really excited to see what is going to come out of this accelerator.
So to take advantage of this, just apply for the FileCoin Frontier Accelerator by November 15th using the link in the show notes.
All right, guys, we're going to get into this episode with Phil about how cryptography is changing the world around us and empowering the individual. But first, we're going to talk about some of our sponsors that are also empowered by cryptography. When you own crypto, what really matters is the security and ownership over your assets. Being a part of the Bankless Nation means having complete sovereignty over your crypto. The easiest way to do that is with a Ledger hardware wallet. A hardware wallet is a little device that manages your private keys for you, so you don't have to worry about proper private key management. Your Ledger hardware wallet keeps your private keys private, but still lets you have easy access to your crypto. The combination of my Ledger hardware wallet and MetaMask lets me store my crypto assets in the most safe way possible, but still lets me easily access Uniswap or all the other DeFi apps that I use on a daily basis. If you already have a Ledger wallet, you can use the Ledger Live app to participate in some of the money verbs that we discuss in the Bankless program. The Ledger Live app is your headquarters for managing your personal crypto finance. It's a great tool to manage the assets you hold on your ledger, as well as receive a portfolio summary of all the assets that you have stored. Using the Ledger Live app, you can buy Bitcoin, Ether, and stablecoins and have it sent directly to your Ledger hardware wallet, skipping over the trusted exchanges and getting your assets into your control. You can even use the Ledger Live app to swap crypto assets natively inside of the app, so you never need to send your crypto assets away from your ledger to make a trade. Buying a ledger is like buying a fire extinguisher. The best time to get one was yesterday, especially if you're doing something silly like holding your crypto in a hot wallet that's always connected to the internet. If you haven't gained full control over your crypto yet, go to the link in the show notes and get your ledger today.
Bankless Nation. Do you want to go fully bankless, but in the real world? Monolith is the DeFi account that you need. It wraps your ETH address in a bankless Visa card, and it does so much more. It closes the loop from fiat to DeFi, so you can onboard fiat to DAI on Monolith with zero fees. Then you can convert that DAI to ADAI, which is an interest-bearing savings account. Again, zero fees. And then you can spend that interest in the real world on a Visa card, so you can finally buy your cup of coffee with interest earned in DeFi. Guys, this is magic. This is the closest thing to the Holy Grail crypto card, and Monolith gives you all of it. You need to download the app at monolith.xyz to get your bankless Visa card. It's optimized for European listeners. They'll be coming to the US soon. And when you get that Visa card, the Monolith card, tweet about it when you do. I love seeing people unpackaging their beautiful bankless Visa cards. It makes me realize that the revolution is here. Search Monolith in the App Store.
All right, guys, let's go ahead and get right into this episode with Phil Bonello.
All right, Bankless Nation, really excited to welcome Phil Bonello, who is the Director of Research at Greyscale. He was formerly at Ikigai Asset Management, and before that, Messari. So he's been around the block in crypto, really knows his stuff. We're going to talk with Phil today about his sovereign individual thesis paper, and in general, how crypto empowers the individual. This is a technology for the people, by the people, as David and I have talked about so many times. This is a central theme of the Bankless Nation, and we're really excited to have Phil join us to talk a little bit more about it. Phil, how are you doing today?
I'm doing really well. Thanks for having me, Ryan, David.
Oh, it's super exciting. I think we are kindred spirits, specifically after reading some of your writing. I want to start with this question. Do you think cryptography is inherently an anti-authoritarian technology?
I'm not sure if it's anti-authoritarian. I would say that it's a very empowering technology. Vitalik, I think, put it probably best, the best that I've seen, and I'll just quote him here. Is that cryptography is truly special in the 21st century because cryptography is one of the few fields where adversarial conflict continues to heavily favor the defender. So, and then he goes on to say the average person's keys are secure enough to resist even state level actors. And I think that kind of sums it up really well. Throughout history, and we'll get into this through the podcast, but throughout history, the leverage of violence has really favored the attacker, and so it's cryptography has kind of been this balance for the defender.
Let's get into the conversation of defensiveness versus attacking. And I think a lot of people might not understand where we're coming when we talk about, the leveraging of violence. Because we're not talking about like a bar fight or, two people, with bloody fists. What are we talking about, Phil, when we talk about the monopoly over violence and being defensive or offensive in terms of technology?
It's helpful to take a step back a little bit and look throughout history, and this is kind of what the sovereign individual does. So you think back to hunter-gatherer times, no land, no possession, rule by tribe, right? There's no idea of personal property. Then you go to the agricultural age, there's land, possessions. These are things that there's the idea of personal property. There are things that you have to defend. And because of that, feudal lords emerge, and there's this protection as a service that kind of rises out of this era. And then you go to the industrial age, and we see the rise of armies with guns and factories run by nation states. So there's continuously consolidation of power. And then we go to the nuclear age, and even more leverage on violence, right? We see the development of superpowers in today's world. And then finally, you shift to the information age, which is kind of a big shift in the leverage of violence, like we talk about, not only from the point of view of cryptography, where it makes it it makes it easy for you to defend your personal digital property. Whether it's money or your non-fungible tokens or your digital assets that are accruing cash flow, whatever it may be. Those things are now they can now be defended through cryptography. Along those same lines, we have global access to information. Weapons really have become information. We have virtual reality. It kind of balloons from there.
And one of the things that I think it's important for people to understand is that who the entity that is authorized by the people in the social contract to use violence is ultimately the entity that we all trust to use that power correctly, right? But sometimes these structures, the nation state structure, but also just like the power structures, the hierarchies that are generated throughout history that we give authority to, sometimes they don't act in ways that we really ideally want them to. And what cryptography is doing is really giving a very strong tool that the individual can leverage against the power structures of authority in order to retain their freedom, right? And a good illustration on this is a nuclear bomb or nuclear missiles, no matter how many nuclear missiles the world generates, can't force anyone to give up their bitcoins from their private keys, right? It doesn't matter the strength of the physical power of an authority, because cryptography is always more powerful than that. So understanding this, Phil, how does the world change as a result of the leveraging of cryptography?
Yeah, so I think there are a few different vectors. I mean, one, you can have a lot of things that really happen outside of the purview of governments, and I don't mean this in like an anarchistic or libertarian way. It's really just empowering, right? You can conduct transactions without anyone's permission, which literally was impossible before, from around the world, right? And I think that's been really evident in the past 6 months with the rise of DeFi, kind of the rise of decentralized autonomous organizations where people can actually transact without a middleman, and there's really bountiful transactions occurring, and people are organizing themselves through Discord. So not all of this, not all of the communication, not all of the organization has to happen in an encrypted environment, but the power of encryption and the recent rise of these cryptographic networks has allowed for value transfer in a way that we haven't seen before. I think that's pretty powerful.
I think one question that's been on my mind recently, Phil, with all of kind of the has it been an increase in regulatory actions lately? I'm not sure, but it seems almost like it. So FinCEN with BitMEX, we talked about that on a previous State of the Nation. FinCEN also, actually the DOJ fining Coin Ninja, which is a privacy technology on Bitcoin for $60 million. I mean, do you think that nation states will be okay long term with their citizens retaining this powerful technology, this cryptography technology? There was a time, as I understand it, cryptography was sort of just a national security sort of technology. Only nation states could actually use it. It wasn't necessarily legal for individual citizens to use it. Now anyone can use it at this point in time, but are we in this special era of history where maybe it's okay, and could nation states suddenly change their mind and outlaw cryptography? Are you concerned about that?
I think there is some concern there. There's been some recent guidance on the worries of end-to-end encryption, and I think with some of the upheaval that's been going on in society and online specifically, and how much power is aggregated in a few media platforms and in the hands of a few companies, I think the public starts to look towards central governments to say, protect us, fix this. And that's a kind of slippery slope, because when you start to ask the government to fix these things, you then place more power in the hands of the government. And that's not necessarily a bad thing all the time, but absolute power corrupts absolutely. And so I think the whole trend of encryption and censorship resistant applications is a really important one. And I think probably a year or two ago, when if you're talking about censorship resistant applications, uh, you're pretty much going to get blank stares. Nobody's going to really understand the reason behind it, and that was true throughout the 2017 2018 crypto market, where you try to argue for why these applications may or may not be valuable, and you start to get into censorship resistance, and it's like, well, people just don't care. And so, in the sovereign individual investment thesis that I put together, one of my theses was people won't care until they have to. So, it as bad as it sounds, things have to get worse before they get better. And I think we've been kind of lulled into this idea of, um, outsourcing our defense, right? And now we're entering a period where it's easy to defend yourself from outside attackers. So now with this restored power, I think people are going to start to take control for themselves, right? Um, and so I've been really hopeful in the last year to see developments with some of these censorship resistant technologies, different parts of the Web3 stack, so to speak. Whether it's kind of DeFi growing up a bit on Ethereum, or Live Peer doing some really good work and like getting some strong adoption, or like Filecoin and Sia and these cool projects are just building out different parts of the Web3 stack, and I think that'll be really important.
Ari Paul recently put out a tweet, and I've been saying this kind of thing for a little bit in different words, but he put it like this. He said that he thought the right to cryptography should be a constitutional right, basically. So, in the U.S., of course, we have, freedom of speech, the right to assemble, that sort of thing. We should also, he says, have the right to cryptography. That should not be illegal, banned by the government. Would you take it that far? Do you agree with that take?
Yeah, and honestly, I think part of what's so powerful about cryptography is at some point it won't matter whether it's legal or illegal. It's just people will be able to transact and use this technology because it's available, because it exists. That's part of kind of like why I think cryptography is so important. It doesn't matter what you think. It doesn't matter what I think. It doesn't matter what centralized organizations think. It has the power to exist outside of their purview.
You're saying they can't outlaw it.
To a certain extent.
And I do want the listener to understand that we're not just talking about cryptocurrency. We're not just talking about Bitcoin and Ethereum. We're talking about the technology that enables these things, which is cryptography, which enables a bunch of other things that are highly relevant to what we're talking about and what we're going to be talking about in this podcast, where communication nowadays, and even when we roll back the clock, where communication was like a letter in the mail, right? Where you would need government infrastructure, a government utility to communicate across any distance that's any further than a human to human conversation, right? So if you want to communicate with somebody across the nation, you would need government infrastructure to facilitate that by sending a letter, right? And with the growth of the internet, we no longer needed the government, but we still needed centralized intermediaries. Facebook Messenger for one, or SMS text messaging is still using a data provider, and so even with the growth of the internet, we still didn't have a individual to individual conversation replicated over the long distance without having like a centralized intermediary facilitating this. And so in addition to replicating cash transactions, like where Bitcoin can replicate the handing of cash from one individual to another, cryptography also replicates the instantiation of having one person converse with another person without any centralized intermediary. And so what is really interesting to me, Phil, and I think what's something that you've tapped into, is that this cryptographic protocols, be it a cryptocurrency system or cryptographic communication, seems to be creating public utilities, internet-based public infrastructure for replicating peer-to-peer behavior, both as cash transfers and communication and privacy as well. And we now are able to have internet-based privacy or secrets without an intermediary. And so when this world of public utilities that are cryptography based, that are peer-to-peer based, comes into existence in a world where the only alternative was a centralized intermediary, and so the centralized world has everything to lose, and the new cryptography protocol world has everything to gain. What happens when there is the ability to exit? What is the through line behind the ability to exit into this system? What happens to our legacy systems?
From an individual level, I think it's just an equalizing force, right? Everybody kind of has access to the same markets, the same information, the same job market, and that's going to be a really interesting shift. It could be a really great thing for developing countries, and it may be a tough pill to swallow for developed countries, right? Because developed countries have benefited from these asymmetries for a long time, and the developing countries have kind of suffered. And so as we kind of move into this paradigm, people from developing countries, they may live in areas that are lower cost. Previously, they may not have had access to higher education. Previously, they may not have had access to high-paying jobs. But now in this world of, you can call it kind of like the crypto economy, whether it's specifically talking about cryptocurrencies and things built on Bitcoin and ETH and so forth, you can actually transact in like this trustless environment and feel good that you're going to receive your payment, and that you can do work from anywhere in the world, right? And so it's really interesting.
I think what you're saying is all of these developed countries, so-called, all of the centralized infrastructure they've built no longer matters, or it matters a lot less now that we have cryptography-enabled technologies like cryptocurrencies, like cryptographic communication, that sort of thing, right?
Yeah. I mean, it goes further than just cryptography, which I think we'll get into a little bit. But I think cryptography is kind of the last mile for the execution, right? To actually be able to transact and to be able to participate in these markets. Trust is really the backbone of really flourishing markets, and now you can have trust on a global scale.
To me, the big thing that I see is the relevancy of borders seems to just fall apart in this cryptographic infrastructure world, where the border that separates the United States and Mexico means less when I can pay money and receive services from somebody in Mexico or any other country, like never mind any bordering country to the United States. I can immediately have a relationship with someone across the world. And so, kind of what Ryan was getting into is the countries that have all of this great infrastructure set up in order to, promote the well-being of their citizens and perhaps have much better infrastructure than, developing or third world countries. That matters less because now third world countries and developed countries are accessing the same infrastructure. And so I know you pay attention to the subject of, an internet-based economy where it's outside of any particular nation state's, authority or regulation. Talk about an internet-based economy that leverages these cryptographic protocols. What does that look like, and how is that different from the economies that we are familiar with today?
I think the internet-based economy really just allows people to let their skills flourish, right? They don't need to depend so much on accreditation and the 4-year educational system. They can participate in something like a DAO, like we saw with Wi-Fi, and all these communities that arise on Discord, and you can become a community member. You can help develop the protocol, and it doesn't matter what your background is, right?
One thing I find super interesting about this, and you were talking earlier, Phil, about like cryptography and crypto economies being the great equalizer, right? I mean, thinking about like, have you ever asked yourself what's the value of, assuming you're a U.S. citizen as well? Like, what's the value of your U.S. citizen, right? It's
Mhm.
interesting. That's like, primarily a product of where you were born. It's sort of a geographic lottery. And what are the benefits of living in the United States? There's some drawbacks, of course, but over the years there have been tremendous benefits, right? That's why sometimes you have individuals immigrate here to the U.S. And traditionally, it's been things like, well, it's got a sound legal system that protects property rights and protects corporate law, right? So that's a benefit. It also has a robust financial economy. So it's a great banking system. Oh, and it's got a good way to set up a business and create capital. So you can create your Delaware LLC company, and you can start to raise capital from like Wall Street or Silicon Valley. It's got all of these places. Well, it's interesting in crypto and what you're saying with like these DAOs and these internet communities. All of that becomes flattened because now if I can set up a decentralized autonomous organization, a capital pool on the internet using Ethereum. I don't need the U.S. legal system to do that. I don't need the U.S. banking system to do that. I have decentralized financial tools like Compound, and I have a Gnosis multisig for my bank account. Right, I can do all of this stuff at even a higher level than I can plugged into the U.S. system. So this is like a great equalizer. It doesn't matter if you're in India or South America or any part of the world. You have access to the exact same super financial infrastructure, super economic infrastructure that everybody else does. You're no longer locked out. So it's no longer a product of the geographic lottery. Everyone gets equal access to this stuff. That's what's so cool to me. Like, what do you think about that?
Yeah, and I think to expand on that, it's this idea of like automated trust that's accessible anywhere in the world. And that's what's so powerful to me. It's that these markets are just now available anywhere to everybody, and you can depend on them, like you were saying. All of these different primitives are being set up so that uh, you can really do most of what you need on the internet, and without the need for a trusted third party. And that's really empowering. That's really powerful for the individual.
What Ryan and I call the Bankless Nation is kind of this nebulous set of people that are leveraging this new system for their finance and also for their labor too, right? And one thing and so Phil, you call this like a new trust system. But what the legacy nation state system is a nation state is itself a trust system, but it has very bookended geographic regions with borders where they don't really commit to any trust. And to me, that's what a decentralized finance system that's based on cryptography. What that is really creating is an internet level trust system to create a platform for economic activity and for people from across all labor markets to participate in. And one thing I'm particular, and you kind of something I want you to expand on is how this is a tough pill to swallow for the well-developed nations like the United States, and perhaps a boon to the undeveloped nations of the world. Can you elaborate on why highly developed nations might have everything to lose and why undeveloped nations have everything to gain here?
Yeah, and to do that, I'll take a step back for a second. So I think it really, to me, starts with education, and uh, formalized education is becoming much more informal. So uh, like Bankless Nation, for example, I look at you guys as educators, right? Uh, Another example is you can go on Code Academy and you can learn how to be a pretty decent Python developer, and then hone your skills in community chats and with other higher level developers, right? And So that first step of being able to become educated without going to a college and spending $200,000, that's a really big deal. And when everybody in the world has access to the same information, they can become educated in the same way, right? So now everyone in the world is on the same playing field from an education standpoint. And when everyone in the world is on the same playing field from an education standpoint, now you have to look at the next level, which is the market. Where are these educated individuals going? So they're going now to the open market, to the job market. And before, the job market was a little bit more segmented, from one nation to the next. Well, now through cryptography and through some of the tools that are being built on things like Ethereum, uh, anybody can participate in these markets, right? And when anyone can participate in these markets, the people who are in the developed worlds, who have higher cost of living, who paid $200,000 for their education, who expect much higher wages for the work that they do, those people now have to compete with the people in these developing countries, which they didn't even the people in the developing countries didn't even have the opportunity to go to these 4-year institutions, right? They didn't have the opportunity to spend $200,000. Their cost of living is a fraction of what is seen in the developed countries. So now they can perform work for a fraction of the cost as well. So this competition between the developing countries, which have they can deliver work at a fraction of the cost, and the developed countries, which have they have a much higher baseline for their work. That's going to be an equalizing force, and so I expect over the coming years to see the wages in the developing countries go up substantially, and it might be we might see some difficult times in the developed countries. And what this also speaks to is that there's increased competition for workers, right? People who, increasingly are viewed as maybe unskilled laborers, or who work for a given organization and do X, Y, Z, because now there are more people in the world who can do X, Y, Z, right? It is increasingly a great environment for people who are creating things, right? Because you can create an organization, you can create a newsletter, you can create a podcast, you can create whatever it may be from your living room with a laptop and an internet connection. I would also say it's probably a great time for capital allocators because there's going to be so much creativity. These capital allocators have, I think, a larger pool of things to allocate to. So, long story short, it's an increasingly competitive environment for workers, and an environment of increasing leverage for creatives, creators, and capital allocators.
And I think we can definitely take lessons from what has recently happened with the COVID crisis. Two cities that have seen mass exodus are San Francisco and New York, possibly the world's most dense cities with the highest cost of living, right? And people want to move away from places of concentration because that's where COVID is. That's where the highest risk for contracting COVID is. But also, I would say that could actually be secondary for people wanting to move away from $3,000 a month studio apartments, right? Where they are already working from home, and so if they're going to be working from home, like COVID's not going away anytime soon, and so they are going to likely move from places of high cost, high concentration out to places of low cost, low density, because they can still do their best work through that medium, because technologies like Slack, like Discord, and also payment technologies like cryptocurrency enable this to happen, right? And we don't have to talk about the migration from San Francisco out to the middle of California or like Tahoe, but we can also talk about the migration from first world, from countries like the United States or other highly developed countries into lesser developed countries that are more tax friendly or are just more have less, and also just have less restrictions. I think we're seeing Raoul Paul, who is doing a great job with Real Vision, live in the Cayman Islands. It's a fantastic place to live. Who doesn't want to live in the Cayman Islands all day? And I think this is kind of going to be the story of the next few decades, is a mass migration, a mass restructuring of where people want to live as a result of these technologies.
So one of the big themes in the sovereign individual is this idea of treating citizens like customers, right? In a free market, if you're taxing or charging your customers a really high price for a really poor product, then they will go to another product. And I think we'll start to see some of that happen. Singapore over the last 40, 50 years has been a prime example of a country that has really supplied a great product at great prices, right? So the taxes are really friendly, and they've been really efficient with the income that they have generated. I think there's a case to be made that there is a lot of bloat in some of the developed countries. There's a lot of bureaucracy involved, and that starts to weigh on people, right? And so, like you said, since this is all accelerated since COVID kind of hit the whole world, where people are looking to be a little bit more efficient with how they're living their lives. So I think we saw like a really big surge right out of the gate of people exiting cities. I think I still expect to see cities thrive, and I expect to see a flood back to cities in the short term. But people start to move out to the country, right? We've seen a lot of people look at places out in the mountains or Wyoming where taxes are super friendly, or look at like the Cayman Islands or Singapore. But it's now becoming really difficult to even get into some of these tax havens, some of these jurisdictions that are being a little friendlier to citizens. And so I actually think that's a really interesting vector of study, is just how can we work with countries to develop really interesting programs for people who do want to kind of leave but don't know how. I think we're in the early days, but I think we'll see a surge in that in the next few years.
It's kind of interesting because that's exactly what the sovereign individual thesis, I guess predicts, right? And cryptocurrency, anyway, seems to be bringing that closer to fruition.
Hey guys, we're going to pause the episode with Phil and talk about some of these fantastic Bankless sponsors that make this show possible.
If you're going bankless, you need a good Ethereum wallet. Argent is one of the best wallets for the bankless journey. 2 words to describe it: simple and secure. What do I mean by that? First, simple. There's a mobile app you download. You can get set up in 60 seconds. This makes going DeFi easy, easy, easy. That means one tap access. You can trade any token at the best price. You can earn interest and invest with Aave, Set, Compound, Uniswap, many of the other money Legos that we talk about on the Bankless program. Second, it's secure. Its security is battle tested. It's been in the field for more than 2 years, securing millions of dollars. That's why some people now have over $1 million in their Argent wallet. In some ways, it's even more secure than a cold storage wallet because you can set transfer limits on the daily basis. There's no seed phrases to lose. It's always backed up through social recovery. You can even use Argent as a multi-sig for large transfers. Lastly, they just launched a DEX router. That means if you're trading in Argent, you get access to the best rates across the top 10 exchanges in one tap. You can go to argent.link/bankless to download the Argent wallet on iOS and Android and get started. That's argent.link/bankless.
YEARN is DeFi's first self-building project on Ethereum, focused on producing products for those who are interested in earning yield in DeFi. YEARN's various products are all built to suit each individual investor's preferred level of risk, from various vault strategies that leverage DeFi tokens to the safer Earn system, which relies on stablecoins. Vaults are aggressive yield farming robots, each with a unique strategy that is designed to maximize the yield of the deposited asset. YEARN employs some of the most informed developers in DeFi to keep the vault strategies updated with the various yield farming opportunities on Ethereum. For customers who are more risk adverse, the YEARN's Earn product may be for you. YEARN is a yield-aware dynamic money market that automatically seeks the best interest rates across the various DeFi protocols and regularly migrates your deposited stablecoins between the DeFi protocols that are returning the best yield at the present moment. YEARN is a system that is just a little over 4 months old, so things are still very much an experiment. However, this hasn't stopped people from depositing over $700 million worth of assets into the YEARN system in order to find yield on Ethereum. Perhaps the people that deposited all this money were tired of constantly making daily transactions to follow the best DeFi interest rates, and maybe the gas fees that they were paying ended up eating too much into their profits. With YEARN, it doesn't remove the risk of these various protocols that it leverages, but it does remove the overhead of constantly trying to make sure you're finding the best yield, and also so that you don't have to pay for gas to switch up your assets. Check out the products that YEARN has to offer at yearn.finance. That's YEARN.finance, which they also have a nice statistics page to see what other people are doing.
But it's like, it goes back to the question I asked earlier, like, what is the value of your US citizenship, right?
Yeah.
Well, you get to be proximate to a pretty good economy, like a global financial system, like, the S&P, all these publicly traded companies. Well, what if those network effects start to become less valuable? Even like the reason why some people immigrate is, as you're saying, Phil, like the fantastic post-secondary education system that the U.S. has traditionally had. Well, if that becomes less valuable, well, there's less reason to immigrate. The value of the U.S. system as a network decreases, and the value of your citizenship decreases as well. But to your point, it is somewhat a geographic lottery depending on where you were born, but it's also something that you pay for on an annual basis through taxes. And if those taxes get out of whack, then you start to wonder, as I guess a customer of your government, what exactly am I paying for? It's sort of interesting. Like, Dave and I launching Bankless and that sort of thing. We try to use crypto systems as much as possible. So we obviously have to maintain traditional bank accounts because there are some bills that just you have to pay in fiat, right? But the bulk of all bankless activity is actually on crypto networks, right? And so when the bulk starts to transfer outside of the US network and we start to rely less on the US network, and like doesn't really matter where we live to work for a protocol, which is what Dave and I do. We work for cryptocurrency protocols. Well, you start to wonder, what are we paying for from a tax perspective? And there's certainly tons of things we are paying for, right? Like, public education, there's lots of things, but it starts to erode the value proposition of these developed nations and these traditional networks.
Yeah, absolutely. And I think it goes further too when we discuss how more and more is happening outside of the jurisdiction of, regulatory bodies, right? So traditionally we pay for these type of regulatory bodies to keep trust intact, to keep markets functioning properly, to keep us safe. But more and more, like we've talked about this entire episode, those things are happening outside of the purview of regulation. And so if those things are happening outside of the purview of regulation, then we're not necessarily paying for those services. So it's further to the point that there's a growing disconnect between what we're paying for and what we might actually be receiving as a customer, quote unquote. So yeah, I mean, I think, and this is all not. I'm not trying to bash the U.S. or developed countries. I'm proud, to have grown up in a great city, in the city of Chicago, and I'm fortunate for how I was brought up. But I just think that there are trends that signal that there's reason to kind of exit the cities and exit developed countries if the price that you're paying isn't in line with the service that you're receiving.
One question I have about this customer model of the world, which is sort of what the self-sovereign individual kind of talks about, right? The citizen is a customer of the state. Is there's a difference. If I'm a customer of Amazon and I opt out of Amazon, or I do something that they don't think is okay, or that they don't like. Whatever, they can't do anything to me, right? But with the nation state, because we talked about earlier this monopoly over violence, if I do something the nation state doesn't like or doesn't agree with, you know, they could throw me in jail. So this is a different type of relationship maybe than a customer. Just a little pushback on that. What's your reaction to that? Like in a typical customer relationship, the company who's providing the service can't throw you in jail, doesn't have a monopoly on violence, but the nation state does. Does that put individuals in a bit of a different position than a customer?
No, it absolutely does, but I think I don't think this is controversial necessarily. It's the state exists to serve its citizens, and so if enough, um, I guess, unjust actions happen from the state towards its citizens, especially in this age of free flowing information, it becomes evident that the citizens should take a stand, I guess. So, I think the relationship still holds, um, in that people can either say, they can either stand up or they can exit. And yeah, I think the barrier to exit is probably lower than it ever has been, because of all the different things that we've been talking about. The fact that you can leverage education from anywhere in the world, you can leverage global markets from anywhere in the world. You can protect your currency, and just by knowing your private key, right? You can protect all your data just by knowing your private key, and we're continuing to see systems that will empower the individual, to act more as a customer, to exit a system if they feel strongly about it. Um, and so I think it's I think it's just a positive trend. It's just a checks and balances system, right? And in the information age, the individual has the ability to do a little bit more checking.
The line that I think we're circling around that I remember from the Sovereign Individual book is that nation states won't be able to charge more for their services than the value of the services than that they offer. And the authors of these books had incredible foresight because they wrote these things over a decade before even Bitcoin came around and 15 years before Ethereum came around. And juxtaposing these two systems, the nation state is a system that is supposed to scale trust across all of its constituency, and it's also supposed to be this massive property management system, right? Like according to the nation state, they know who knows what, like which piece of real estate, which piece of stock certificate or money, who owns what. That's they're kind of the master node of the massive ledger of the nation state. Whereas Bitcoin and Ethereum do very similar things where they use cryptography to replicate that, to replicate the scaling of trust across the widest reaches possible, and also keep track of who owns what. Those are like the main roles that Bitcoin and Ethereum play. However, there's a fundamental difference where the United States nation is also, or any nation state, is a generalized bureaucracy, right? And one of my friends, CK, said this very well, where any institution or organization is always interested in expanding itself, right? Like every institution wants to get bigger. And, Ethereum and Bitcoin don't necessarily have that baked into their social contract, right? Like Ethereum is based off of cryptography, which means that it actually has hard coded limits as to what it can and wants to do, right? And so the United States nation, the average tax rate is 34-ish%. But Ethereum, the average tax rate is the gas that you pay on your transaction. And so it's explicitly a pay per use taxation system, which I think is the most ultimate fair way to view things. And so when you say that there's just this massive checks and balance between these two systems, that's what I see, where the United States has this arbitrary tax rate, or any nation state has this arbitrary tax rate, and Ethereum and Bitcoin have this tax rate that's a very pay per use type of system. One way to view this is checks and balances. But another way to view this is that Bitcoin and Ethereum are diametrically opposed to the nation state. Is this an acceptable way to view things, or is there flexibility with how to view the opposition between things like Bitcoin and Ethereum and nation states?
Yeah, I personally don't view it as binary. I think again, like it's a check on the power, right? There's reason to have regulations, but there's reason to not allow those regulations to get too large and too burdensome. And I think your comment just a minute ago about these systems, these companies, these government organizations, they naturally want to get larger, right? That's often their goal. Each sector wants to have more, right? And so there's a constant reach, there's a constant overreach, and to then have these systems that are outside the purview of government kind of take away some of that, I think is just a healthy check on the whole system. And I would maybe push back a little bit in the idea that Bitcoin and Ethereum are not trying to get as large as they can be, right? And I think Ethereum and Bitcoin have done a really good job of programming certain focal points into their communities, right? Bitcoin is this idea of sound money, uh, something that can't be stopped. You can't change the supply, and because of that, there's been a religion that has been built around it. And similarly with Ethereum, right? Like it's a different ethos, and uh, they're the whole Ethereum ecosystem is trying to build kind of like the Bitcoin ecosystem, but more expansive, and kind of pushing the limits a little bit more. And I don't think this is controversial either to say that both of those communities are really fighting hard to be bigger than each other, right? And so
Yes,
I think it's just a kind of natural competition, and it's healthy. It's just healthy to have more competition. And so the rise of Bitcoin, the rise of Ethereum, the rise of digital money and these digital goods is a healthy check on kind of the physical, the meat, kind of the meat space that we've grown up in.
One of the topics of conversation that is frequent on the Bankless podcast and in the Bankless newsletter and everything about Bankless is the protocol sync thesis, where we think that protocols like Bitcoin and Ethereum, and also DeFi protocols found on Ethereum, are quote unquote dense, right? They fall down to the bottom of a stack. And one thing I think is relevant to this conversation is the possibility that, rather than being diametrically opposed to the nation state, there is room for the nation state to sit on top of these protocols, where maybe we have like a nation state that is quote unquote powered by Ethereum, right? Or powered by Bitcoin. Have you thought about this world?
Yeah, I think that's absolutely right. These systems uh, definitely they provide optionality, right? They sit at the bottom, like you said, of the whole stack that can be built on top. And so not everybody wants to interact in a trustless way all the time. Um, Not everyone cares about that level of security or sovereignty, right? And so I think it's about building all these different options on top of these completely trustless, self-sovereign protocols. And optionality is just such an important characteristic of these networks.
I do think that that's the right model. It's like the protocol sync model for this, for nation states. There might be a time where nation states feel like crypto is threatening, just like there was a time where nation states felt like the internet was threatening. And then they'll figure out how they can actually leverage, not take over, not control, but actually leverage these credibly neutral protocols for their own purposes. Right? For example, so the great thing about Ethereum and Bitcoin is these are intra-national protocols. And by that, I mean like nation state to nation state. You don't have to trust, Russia doesn't have to trust the United States of America in order to send Bitcoin or Ether on a network to them, right? There's no banking system in the middle. There's no SWIFT transactions. There's nothing. It's just a lower like in the stack infrastructure that they can leverage. And like there could be tons of ways that nation states wake up to how this technology is useful. I was just reading this morning that Goldman Sachs, right, our favorite banking company, just got caught by the DOJ stealing $600 million from the country of Malaysia. $600 million. So the DOJ caught him red-handed, and Goldman is paying a $2.3 billion fine. All of this is done behind the scenes. It makes one wonder, like, about all of the other theft we haven't caught in these massive banking organizations and banking companies. But what if a whole bunch of that activity was on public open ledgers, right? Like the DOJ and regulators could kind of tap into that. It would be transparent. It would be open. We wouldn't have to like listen in on closed conversations and go look at the evidence and track down transactions. So there could be ways even regulators start to use these crypto systems to help to even enforce their national laws. Is that kind of what you're saying, Phil? Like you agree with that vision of the world?
Yeah, and I think it's a constant push and pull, right, throughout history of kind of the old guard versus the new up and coming technology. I I think I saw a Twitter thread recently that was looking at women riding bicycles, um, and maybe just bicycle riding in generally, like 80 years ago or something. And it was comparing that to kind of the uproar of social media and the control that these big corporations have over us. And the reason I bring up that idea is just that when new ideas, when new technology come to the market, they seem spooky, and sometimes they are, and sometimes they have the potential to do bad for society. But oftentimes, they can be used for enormous good. So I think it's just about educating everybody, and I think that's really what it comes down to. And education is just it takes a while, and you guys are doing God's work, just educating everybody on Ethereum and all these ideas, and it just takes time.
Yeah, on the time thing, I got to be honest too. Like the Bankless Nation probably skews a lot younger than the general population, right?
Yeah.
I wonder if some of this is just going to be generational, Phil. Right? So it's really difficult to understand this stuff. But if you grow up with it, it's difficult to understand. It's far harder to understand the fiat system. So maybe that's why some of this needs to play out over decades.
Yeah, absolutely. I completely agree with that, and it just it just takes time. It's simple. It's as simple as that almost.
Phil, the reason why we got you on here is because you wrote this fantastic piece called The Sovereign Individual Investment Thesis, where you labeled 5 different characteristics that align with human motivation: acquire, defend, bond, learn, and feel. Can you elaborate on these 5 characteristics and how they relate to some of the ideas or thoughts that we've been describing here so far on this podcast?
Yeah. So when I read The Sovereign Individual, I was trying to kind of develop a worldview, and I was between jobs, and I was just trying to understand what was going on, and what I wanted to do. Uh, Especially with respect to kind of the crypto market and what was going on at the time. So I was looking at some of what was going on in Ethereum and some of what was going on in Bitcoin, the adoption or the lack thereof in some of these applications, and I was trying to figure out a way to kind of develop a framework to evaluate why some of these protocols or applications will or will not be adopted, right? And so I think I borrowed these from the book Drive. So the five motivations are acquire, defend, bond, learn, and feel. So this is really just like greed, fear, belonging, curiosity, and feeling. as like kind of these core human motivations. And the reason that I kind of went down this road was the quote from Jeff Bezos talking about 10 years out, people ask me what's going to change, and I think a better question to ask is what is not going to change. Well, human motivations don't really change. I think they just shift, right, a little bit. And my I think my assertion is that right now people are kind of under indexing the fear part of things, or the ability to defend. And the reason they're doing so is because for a long time we've outsourced defense, right? There hasn't really been a way to mount a really good defense for one's personal property. You always had to outsource, right? Whether that is to a government organization, or whether that is to a third-party entity like a business or a bank. They're going to hold your data. They're going to hold your money. They're going to protect your personal property. And now that has changed a little bit. We talked about cryptography earlier in the episode. Now, we think about like money. We think about our data. The trend is just starting to change, where I think people are starting to take a little bit more ownership over their own wealth and over their own data. Some of the systems aren't in place yet, to be fair, right? Like it's really hard to interact on the internet as an individual if you're not super technical and not have data leak. So it's still early days, but that is kind of the lens through which I looked at the sovereign individual and then evaluated kind of these three different pillars. The three different pillars being, the fact that instant information dissemination sort of breaks down barriers to entry and exit. The other being that non-sovereign digital money really decreases the power that nations have for inflation and taxation. And then the last one is like the fact that encryption gives the ability for applications to exist outside of the purview of regulation. So I walk through each one of those pillars through the lens of, and I mostly focus on the acquire and defense mindsets, and how censorship resistant technology and some of the applications that have been built thus far, why they have or have not kind of gained adoption.
I see this dynamic being particularly salient in Bitcoiner culture, where there's two things that Bitcoiners emphasize above almost all others, which are stack sats and hold your private keys yourself, right? Where acquire Bitcoin and then you leverage the maximum power of cryptography to defend them, right? Defend your stack.
Mm-hmm.
But this emphasis on defense implies that there is something to defend against. So what are we so worried about, coming to take our Bitcoins? What are we trying to defend against?
Anybody who wants wealth, right? I think there are always people who will be trying to take wealth however they can, and through coercive forces. And this isn't just governments, or it might just be someone down the street, a hacker of some sort. And so I think the idea is just, we now have the power. So with that power, let's take some responsibility for our own goods. And then, like I said, in a lot of instances, it feels good to have layers of abstraction in between. But what's important is having that optionality to kind of say, okay, I saw something here or there, and I now no longer want to trust an organization or an institution. But I think that need will always exist, and that want will always exist to have an easier way to interact, and to kind of take the burden, take the blame, take the responsibility off of the individual. And ask someone else to kind of, carry some of the weight.
So, Phil, when you filter things through the sovereign individual investment thesis, particularly through the lens of acquire, which is like plays to basic human greed, desire, and then defend, which plays to basic human fear, you went through a whole bunch of different, I guess, technologies or industries. What did you kind of come away with? What are some of the strongest, I guess, assets or industries or categories that really exemplify the sovereign individual thesis?
I think we're in a really great industry, in the whole
Yes.
the whole crypto industry. It's really kind of the perfect industry for the sovereign individual thesis, and all of this has been accelerated since COVID, right? So with all this money printing that we've seen, there's been a reaction, and that reaction has been, okay, maybe this digital scarce money, something like Bitcoin, makes a whole lot of sense, right? And so I think that has resonated with a lot of institutions. It's resonated with a lot of individuals around the world, and I think we've seen adoption just start to tick up in the last couple months. Again, with increased upheaval, there is censorship. There's a call from censorship, even by the citizens, of our country, of countries around the world. And when there's censorship of these applications, then there will ultimately be a cohort of people that kind of opt out and create alternative platforms. And so I think we've started to see that too. We've started to see people develop on something like Urbit or something like Ethereum, and develop these applications that are outside the purview of government regulation. So those are two big ones. Obviously, remote work. I think we've seen the pendulum swing, super aggressively onto the side of remote work, and no one's going into the office. I expect that to kind of shift back a little bit, but I think in the long run, in-person work will be more of a luxury than it is a necessity. And I think the tools to make remote work feel as much like in-person work will be a big area for improvement. I mentioned education. Education is probably the most interesting and important vector to me, just because you can educate people without even without them even knowing they're being educated, right? And so I've said this a couple of times, but you guys are educating your audience, and that's a huge service. I think educators will kind of be like the next celebrities, like the next wealthy cohort, the people that are looked up to, that are paid the most. And I think we kind of see that already. Like, you look at kind of what Rogan has done on podcasting, I think has been really powerful, bringing in people from all walks of life and educating his audience on a bunch of different topics that I don't think they would have previously thought about. Pomp has made some really interesting developments recently, so he's kind of taking personal finance responsibility to the TikTok crowd. I forget who the exact person he partnered with was, but I think that's a really interesting angle. So yeah, education, I think, is just massive, and it's a really empowering tool. And then and we're still so early in this part, but the idea of being able to do work for a DAO, for a decentralized autonomous organization, and to just plug yourself in as part of this organization. Nobody actually needs to know who you are as a person. They just need to know who you are as this digital identity, is super powerful. Whether you're contributing code, or you are developing memes for the community, or you're organizing the Discord chats, or you're developing the token structure, these jobs can be done from anywhere in the world, and you don't even know, you don't need to know who the individual is. So I think those are a couple of the big trends that I see. being in the crypto space, I'm really excited about Bitcoin and Ethereum and all the innovation that's going on there.
Yeah, one example recently, David and I, Bankless Nation, we were looking for someone to do some graphics design work for us. Someone just within our circle, part of the Bankless Nation from Nigeria, just stood up, sent us his portfolio of work, sent us an ETH address, did some fantastic work for us. We sent him DAI from our Bankless bank account, transaction done, work delivered. I don't know how this individual was educated. He lives in
Also
Nigeria.
didn't care.
Didn't really matter. Didn't matter at all for the work product. Did an excellent job, and that's all part of this new digital economy that's rising up. Geographic barriers don't matter. We didn't have to wire or ACH transfer funds from one bank account to another. He didn't even have to open a bank account. Maybe he doesn't have a bank account. I don't know. It doesn't matter once again, because this system is completely equal for everyone who has an internet connection. It's powerful stuff.
Yeah, absolutely. You're basing the transaction based on the quality of the work, and that's it. And that's really cool.
To me, what I'm seeing, and again, especially with COVID and how COVID has changed the world, is a pretty strong reaction against universities, at least with private higher education universities, especially private universities, and their very exorbitant costs. On the Jesse Walden podcast that we did a while ago, talking about the ownership economy, he described this like S curve of adoption, and it was mainly talking about Silicon Valley tech platforms like Twitter and Facebook, where these systems initially start off as something more or less a public good or a public utility, like Facebook as a public utility to socialize with your friends on the internet, or Twitter as a public utility to share your thoughts. And as these platforms grow, they grow to the size of the world, size of the internet. But then they can't grow anymore, and so they start to turn extortionary, right? In order to grow the value of their shares, they need to first expand to absorb as many people as possible, and then extract as much advertising revenue out of these individuals as possible. And I think we can say that this S curve of growth of first being a useful utility and then being an extortionary institution also applies to the nation state. But I want to keep this conversation on education, because I think we're seeing that same education, that same S curve of growth apply to private universities, where universities grow based off of being like a utility, a useful service. And then, especially with Ivy League schools, they kind of have been like resting on their laurels, right? And, it has turned into a institution for education, and it has then manifested into a system of generating hoops for people to jump through, right? Just to provide them a $250,000 piece of paper at the end of 4 years, so that you can share that piece of paper with other people to tell them all about the hoops that you've jumped through. And maybe that's a disingenuous or incomplete illustration of what the university is, but it's at least some part true. And going along the theme of using tools or having a new world or economy that kind of does away with all this superfluousness and just valueless work in order to get a piece of paper that shows all the hoops that you've jumped through, in lieu of a world where merit and your actual labor as your resume. I think that's what a lot of this technology really enables. Do you have any thoughts on that?
Yeah, and I think it goes with what we mentioned earlier, right? That organizations tend to want to continue to grow, right? There's continuous reach, and I think that's what we've seen with education institutions, right? They've just continued to grow because that's their goal, and you can't knock them for it. But as you grow, like there are going to be more administrative costs, there's going to be more bureaucracy. It's going to be harder to move as fast. And we've just seen alternative technologies and alternative education systems come to fruition that it just makes it difficult for the brick and mortar system to kind of keep pace and to deliver the same education for the same cost. So, I don't think it's like, evil corporation or evil education systems. I just think that it's a sign of the times, and the technology and the systems have developed to a point where you can do all of this. You can become educated informally at a fraction of the cost. The last I think, and I think it's been pretty agreed upon that, like, one of the main value propositions of these institutions is not necessarily the accredit or the education, but rather the accreditation, right? And you mentioned this. You finish your education, you have a piece of paper that says you went to school. And I think that is one of the key missing pieces in the online economy right now. How will accreditation be handled? Because if you're not going to go to school, if you're not going to be a writer, what is it? So, and I think GitHub is probably a great tool. Your Twitter presence, writing is a great tool. If you have like a trade log, then a trade log is a great tool. Just to be able to show that you are competent in the field that you hope to work in.
So let's finish with this, Phil. Let's talk about another system, institution that just wants to grow like a rent-seeking, hungry monster, and that's the banking system. And that's both the central banking apparatus that we have and also the commercial banking system. And similar to education, right? Like the whole bankless journey is like, okay, what happens if we don't need you guys anymore, right? If we can outsource all of this and our security and our property rights management and our entire monetary system to a series of public available ledgers. What happens then when individuals have the option to opt out? Maybe let's first start talking about central banks, right? So we've got modern monetary policies in full swing with modern monetary theory, which is basically fiscal stimulus to print money. And it seems like the governments, doesn't matter which political party is in charge, it doesn't matter where you live in the world, they're just going to continue to print money. But now crypto has entered this space. What effect will that have on government's ability to do that? Do you have any insights into how the sovereign individual plays a role and how crypto plays a role in the banking institutions today?
Bitcoin and Ethereum, it decreases the exit cost, right? So governments can, and I think will, continue to print a lot of money, and that's fine. That is their tool. There's no use, in my opinion, in getting angry about it or worrying about their policies, because now we have a tool to just kind of opt out of that. If you don't think that it's right that the U.S. Is printing a ton of currency, that's fine. Then you should hold an alternative currency. And now there are other alternatives. And so I think that, again, that optionality, that ability to opt out of the system is really powerful. And so, like, we'll see how far it goes before a majority of the population decides to kind of take that road and decides to opt out. We're seeing, I think, the very beginnings of that. And I certainly think that we at Greyscale have seen that narrative of trying to escape dollar debasement grow in 2020, whereas previously I think that was kind of it was kind of a dream. So actually, for the first time in 2020, because of all of this printing, the narrative has actually begun to solidify itself.
One dot I want to connect for the listeners is earlier we were talking about the demand or desire for defensive technologies, or things that allows an individual to defend against capture or extortion, etc. And one thing I'm thinking about right now is Bitcoin, specifically Bitcoin's hard cap, and along also its unconfiscatability is a defensive technology specifically against money printing, right? Where, cash under your mattress is pretty assured to be there, right? There's always the risk of theft, but if there are plenty of ways to securely hold cash in your house that prevents against confiscation or theft. But there's the concept of the money printer where, you can have your cash, but because it's dollars, the money printer can confiscate value from you regardless, right? It can steal the value from your cash under the mattress and by printing new dollars, and this is what we call inflation, right? And so Bitcoin's hard cap is itself a defensive technology because, and this is what Bitcoiners love about Bitcoin, is that no one can steal away your percentage share of all of Bitcoins out there. Is that an appropriate use of the term defensiveness as you were using it in your paper?
Yeah, absolutely. And so to expand there are two main revenue generating mechanisms, in my view, for nation states, for governments. And that is, number one, money printing, and number two, taxation. And inflation and, printing more money typically has benefited the wealthy because the wealthy hold assets which appreciate in that denominated currency, right? However, as in like on the inflation side or on the taxation side of things, the wealthy don't necessarily always win, and there's a growing narrative that I've heard, pleading for a wealth tax, pleading for a tax on not realized gains, but unrealized gains, on literally just the money sitting in one's bank account. And I think that creates a really slippery slope. And I think that will be a wake up call to a lot of wealthy individuals who may be keeping their money in a bank account onshore somewhere, right? And so you start to think about those two vectors of revenue for the government, and I think it's a pretty scary thought. And that is Bitcoin fixes that on both of those angles, right? Like it's unconfiscatable. You unless you know the private key, you can't take Bitcoin away. And it's resistant to inflation. It's resistant to supply changes. And so you can touch it. You can just leave it alone. You don't have to touch it, and your Bitcoin will be safe. It won't be devalued. It won't be debased over time. And I think both of those are just really, really powerful characteristics that the majority of the population has yet to appreciate, but I think we're kind of at a tipping point.
Phil, it has been a pleasure to have you on the Bankless podcast. Thanks for going through your thesis. What's so exciting is that even in a world of increasing control, increasing authoritarianism, increasing feeling like your digital rights are being taken away from you, something emerged, which is cryptography, which gives those rights back to the individual, gives those rights back to the people. And it's certainly tools that we can use in our everyday lives. That's what the Bankless journey is all about. So thanks, Phil, for coming on and talking about that a little bit more.
Absolutely. Thanks so much for having me. It was great taking some time to discuss these topics. It's quite a fun time in the crypto space, and I'm excited for the years to come.
It is an exciting time to be alive, folks. We were born at just the right place and time for crypto. We may have missed the early internet, but crypto is upon us now. Take advantage of it. A couple of action items today. Read the Sovereign Individual Thesis by Phil. We will include a link in the show notes as well. Of course, the Sovereign Individual book is a fantastic book written in 1999, but is still super relevant today. I just finished reading it not too long ago. And it's lots of lessons that I think you guys will apply here. The second thing you can do is become a member of the Bankless Nation. So that's more than just subscribing to the podcast or the newsletter or connecting with the community. Those can all be part of it. But this is about taking control of your money, using these crypto economic systems, going bankless so that you don't have to depend on central intermediaries in your everyday life. This is the new competitive advantage. This is the new citizenship. and we want you to take advantage of it. So start using crypto, start using DeFi, start using Ether and Bitcoin in your everyday life. And of course, guys, risks and disclaimers. None of this was investment advice. The assets we talked about today are risky, including Bitcoin and Ether. So is all of crypto. So is DeFi. You could lose what you put in, but we are headed west. This is the frontier. It's not for everyone, but we're glad you're with us on the Bankless journey. Thanks a lot.